products. So let's look at retirement annuities first. Now, if I still remember my dates correctly, the first retirement annuity was only launched in South Africa in 1957. I could be wrong. It could be 51, it could be 56, but if I remember correctly, it's 1957. I tried this morning to go and find the exact date, but I couldn't find the exact date. But it was in the 1950s. So we tend to think that these kind of savings vehicles and the way we prepare for retirement has been around for generations. And actually it hasn't. Actually, these retirement annuities, these products have only been around for about one generation. So if you are told that this is the solution for retirement, it's not because people have proven it over and over and over again. In actual fact, if you look at the proof, most of these products don't really solve the retirement crisis, or the retirement problem. But it was launched in 1957. The first company who launched a retirement annuity in South Africa was Liberty Life, and they then, all the other companies came on board, legislation was passed, etc., etc. So what a retirement annuity actually is, it's like a personal pension fund. So it works similar to a pension fund you would have at work. It's just you contribute towards it personally, and initially it was created and developed to add to pension funds that people have. Over time, group schemes, pension funds have become less predominant. In the past, most companies, especially big corporations, had their pension funds. Now more and more companies, especially small medium enterprises, don't give group schemes, which means the role of the retirement annuity has become more and more important in people's retirement planning in their lives. So what are the benefits of a retirement annuity? The first thing that everybody tells us about is that you get tax benefits from your retirement annuity. You can claim back your premiums that you pay from tax. But what does that actually mean? So the first thing you need to understand is that there's a limit to how much you can claim back from tax for your contributions towards your retirement annuity, and for that matter on all your retirement savings. So that includes your pension fund at work as well as your retirement annuity. So in total, you cannot claim back more than 27.5% of your total gross taxable income. So taxable income. So your gross taxable income, 27.5% of that you can claim back from tax for retirement contributions. But that includes all retirement contributions. It includes your pension fund, and it also includes your retirement annuities. But there's also a maximum limit of 350,000 Rand per year. So if 27.5% of your taxable income is more than 350,000 Rand per year, then you can't claim more than 350,000 Rand per year. Now, let's quickly talk about how you actually claim it back, because people think that if I put 1,000 Rand a month into my retirement annuity, that's 12,000 Rand per year, I'm going to get 12,000 Rand back at the end of the year from tax. That is not how it works. You don't claim your premiums back. What happens is any contribution you make towards your retirement annuity reduces your taxable income, and you will get the benefit of a lower tax that was necessary for you to pay. So I'm going to explain it and try and do it in simple terms, or as simple terms as possible. So let's say, for example, you earn 100,000 Rand and your tax on that 100,000 Rand is 20%. So 100,000 Rand for the year, 20%, that is 20,000 Rand tax for the year that you have to pay. But you go and you contribute 20,000 Rand for the year towards your retirement annuity. So that means your taxable income has now dropped from 100,000 Rand to 80,000 Rand. 20% of that 80,000 Rand is 16,000 Rand, which means you've paid 20,000, you only had to pay 16 because of the credit from your retirement annuity, which means you will get a refund of 4,000 Rand on your tax. Okay, so if you want to calculate, the easiest way is to take your contributions, calculate your average tax rate, and that's something we might want to discuss in a different topic. Exactly how much tax do you pay? Because people tend to think their tax is a much higher percentage than it actually is. But take your average tax rate and multiply your contributions by your average tax rate. So if you're contributing 20,000 Rand a year, your average tax rate is 20%, you will get back approximately 4,000 Rand from the 20,000 that you've contributed towards your retirement annuity. So you're not getting all the premiums back, you're getting a percentage back from your retirement annuity contributions. Now, what we always say is that what I suggest is that you take that amount that you get as a tax credit and you put it back into your retirement annuity, because that money you're getting back as a tax credit is actually free money. And the moment you put it back into a retirement annuity again, you're getting a tax credit on that tax credit again. So if you take that 4,000 Rand, you put it into your retirement annuity, you're getting 20% on that 4,000 again, which is another 800 Rand. If you put that back into your retirement annuity, you're getting another 20% on that 800, which is another 160 Rand, and so on and so forth. So you can continually put that money back into your retirement annuity so that you're getting free money going into your retirement annuity over time. Now, the reason you can do that is because on a retirement annuity, you can contribute towards it on a monthly basis, which most often is the case. People take out a retirement annuity for 1,000 Rand a month, 2,000 Rand a month, and every single month the money comes off your account. Or you can do it as ad hoc contributions as well. So you can say, listen, I want to add 10,000 Rand or 20,000 Rand or 50,000 Rand as a once-off contribution towards my retirement annuity. So when you get these tax credits or this tax refund, you can immediately take that tax refund and just contribute it towards your retirement annuity again, and it will count towards your tax benefits for the next tax year or the next financial year. Just a quick shout out, Frikkie, and the new interns at our office all say hello. Hi Frikkie, hi new interns, great for you guys to listen to us. Welcome. For those of you who don't know, we run internship programs at iRetire and Retire Rich and Happy to teach some of the young people some experience in our industry, in running a business, in the different areas, so that they can get practically prepared for the future. So welcome, and we hope you are enjoying your time with us. Okay, so that's the tax benefits. Now, another tax benefit that people don't often explain with retirement annuities is that your retirement annuity is taxed at a lower rate internally than another type of investment. So for example, another investment is something like an endowment. So if you take 500 Rand a month and you put it into an endowment product, it's a savings plan, and you put 500 Rand into a retirement annuity, and both of these investments invest in exactly the same fund. So you don't have different funds, you invested in the same fund. The retirement annuity will give you a higher return over time than the endowment, because inside of these products, tax are being calculated and paid over, and your retirement annuity is taxed at a much lower rate than your endowment. Your retirement annuity is also exempt from capital gains tax, where your endowment capital gains tax is paid inside the product every time trades happen in your underlying investment funds. So your retirement annuity will have a lower tax rate, which means it will have a higher return over time. Another benefit from your retirement annuity is that it is protected from creditors. So this is a big one. The money that you have invested in your retirement annuity, as well as your pension fund at work, though that money is protected from creditors. So if worst case scenario happens and you have to be sequestrated, they can come and attach any of your assets in your personal name, but they cannot attach your retirement annuity and they cannot attach your pension fund money. So you can sit with 10 million rand in a retirement annuity and nobody can touch it, not even you for that matter. You can also not put a retirement annuity on as security for a loan because it cannot be attached by creditors. So it is a protection. It's a worst case scenario protection for your retirement. So if everything else fails, you still have the money left in your retirement annuity, and that for me is a very big benefit, especially for people like self-employed individuals, because a lot of people that have their own businesses feel that, but why should I put money into a retirement annuity? I would rather invest it in other things. Well, there's still that benefit, because in business things can go wrong, and if something goes wrong, the money in your retirement annuity is still protected for your retirement.